Thanks for checking out our video, guys. Today, I want to do a deeper dive into credit reports here in Canada. We're actually going to go through a mock or an example credit bureau from the Government of Canada's website, and I'll show you exactly what it is that we look at when we're breaking down someone's credit over the phone when we do a mortgage application. But for those of you who don't have the attention span to sit through another 5 to 7 minute video, I'm just going to give you some quick bullet points first at the beginning so that you do get some useful information. So what impacts, what influences, how is your credit score determined? It's 5 factors. Those 5 factors. Number 1, credit. What kind of credit do you have? Do you only have credit cards? Do you have car loans? Do you have any student loans, lines of credit, mortgages, things like that? That makes up 10% of your credit score. New credit. Who's been looking at your credit bureau? Have you gone to 10 different banks requesting 10 different loans in the last 10 weeks? Those inquiries into your credit history are actually negatively impacting your credit score if you're going through the wrong channels. Mortgage brokers looking at your credit score do not impact your score. I'll explain that a little bit more in detail later in the video. That's another 10%. So we got credit 10%, new inquiries 10%, history 15%. That's how long your credit has been established for. If you are 19 years old and you've had a credit card for a year and it's a student visa, you are not going to have an established history that's going to get you a strong enough score versus someone who's 45 years old and has had an active credit bureau for more than 25 years. So that's 15% of your influence on credit score. The big ones, payment, 35%. Do you make your payments on time? Do you make the minimum periodic payments that you need to? Or are you paying off the balances every single time? 35% of what your credit score is made up on your payment, your repayment history. The other big one that most people don't realize is utilization, 30%. So 30% of your overall credit score is determined by how much utilization you're using. So you add up all the limits that you have available to you across any kind of credit, revolving credit that you can borrow on. So a credit card, something you can borrow on, pay back, and borrow on again. You add up all the limits you have available, then you add up all the balances that are outstanding. If you are utilizing more than 75% of what you have access to, chances are you are negatively impacting your credit score. If you're anywhere from 35 to 75% of credit utilization, you're likely maintaining your credit score. You may be slightly improving it the closer you are to the 35%. The closer you are to the 75%, you might be slightly decreasing it. If you're utilizing anywhere from 10 to 25%, you're probably going to be increasing your credit score, assuming you're making the repayments on time. If you're actually utilizing 0%, so if you've got a credit card on there that you never use, it's probably not helping your credit score because Equifax has no information to determine whether or not you can borrow on that line of credit card, whatever it is, and make payments back on time. So utilization is a big part. So just quick summary, credit 10%, new inquiries 10%, what your history is, how long you've had a credit bureau for 15%, utilization 30%, and your payments history and performance is the biggest 35%. So those are the 5 factors that go into your credit score. I really want to show everybody now what it looks like on our end going through a credit report. So as you can see here, this is a Government of Canada webpage. This shows you exactly what a credit bureau is going to look like. So we've got the fake name here, Cheryl Consumer, 1234 Main Street. This is the first bit of information that we get. In here's the important stuff. So when we do a mortgage application, we ask everybody for a 3-year mailing history. That is because all your registered addresses show up on your credit bureau. Whether you purchase a home, whether you're renting a home and a landlord does a credit check, whether they've got you listed there as a tenant, these all show up. If you change your mailing address with your bank, this is going to go to your credit bureau. Marital status. This is really important when we ask people, are you divorced, separated, single, married? Because it's going to show up on the credit bureau as well. And we want to have the application and the credit report both showing the same information. Current employment. Again, 3-year history is asked when we do mortgage applications to show the lender that we've gone in and determined where you've been working for the last 3 years, what you were doing with those employers, how long you were there, and what your position was. From there, you'll see date of birth that shows up. Then you'll also have social insurance information. So the main way so if we had a John Smith as a mortgage applicant, who knows how many John Smiths there are in Canada, but I'm going to guess more than one. So the ways that we make sure we get the right one, date of birth, SIN number, as well as mailing address history. That all needs to be accurate. And that's the main reason why we need your SIN number when we do a mortgage application, even if we're not sending it off to a lender, because we want to make sure that the credit bureau we're getting for you is actually yours. And then we've got telephone number and the information that's on file for you, driver's license. The next big thing is credit inquiries. So we can see who has been requesting your credit bureau, when they pulled it, who they were, and a telephone number to reach out. So if you've gone around to 10 different banks, and let's just say you were going out and looking at car loans before you came to us, we're going to be able to see those inquiries made by dealerships. And if you go around to a certain amount of people, so it's different if you're looking at independent mortgage brokers who are requesting your credit bureau, because all we can do is get you a mortgage loan. We can't get you a credit card. We can't get you a car loan. We can't do anything, student loans, nothing like that. When you go to a dealership and you're looking at auto financing, that's going to be a hard hit on your credit. If you go to a bank, Equifax has no idea if you're at that bank qualifying for a student loan, a car loan, if you're trying to get a line of credit. So it's a hard hit on your credit score. If you go to 5 different mortgage brokers, all of them pull your credit bureau within 45 days, it's going to be treated as one credit check. You can also go to the banks within those 45 days and make sure that you're only getting your credit bureau pulled for a mortgage application. All of that's going to be treated as one pull. But like I said, if you're only going to a mortgage broker and asking for your credit to be checked, you will not see a decrease in your credit score. And if you pulled it 45 times in 45 days, that's going to be treated as one credit request, because Equifax knows that most people go to different sources to determine who's going to give them what option for mortgage financing. So they don't want to penalize you for going and getting a second, third, fourth opinion. In here is where we see all the credit information. So we're going to be able to see what the name of the lender is, phone number, last time it was reported on. We can see what the balance is. We'll be able to see when it was opened. And then we'll also have ones, zeros, twos, threes. So if your credit bureau is filled with ones, that's great. That means that you've paid your minimum payment on time. A 2, 1 month late. A 3, 2 months late, so on and so on. So credit information stays on your bureau for 7 years. If you have a missed payment within the last 12 months, it's going to still be negatively impacting your credit score. Usually after a year, it starts, the anchor or the weight that is drawing your credit score down by starts to go away. And you really want to see what's called a 2x2x2 rule. So lenders want to see 2 trade lines active for 2 or more years with a credit limit of $2,000 or more available to you, or an original balance of $2,000 or more. So if we see these credit trade lines on here, we want to see 2 of them. We'll see all the minimum amounts. We'll see the minimum payments. We'll see previously high balances. So if in January, if you're getting your credit bureau pulled in March, and in January you owed the limit of what you have access to, So if you have a $2,000 credit limit and you owed $2,000 on that trade line, your credit score is still going to be negatively impacted because of that utilization. So it's really important that you're not maxing out credit cards, but that you're still using them and showing that you can pay off the balances preferably, or at least the minimum payment each month without missing anything. And then towards the end of the credit bureau, you'll see public records. So if anything's in default, if it's gone to collections, if you've got parking tickets that have been racking up and somebody sent it to a financial company who's now hounding you to pay it, that's all going to show up here. If you do have anything with public records or collections, it will be negatively impacting your credit score for as long as it is showing open, and it likely will not stop dragging your credit score down until a year of it being paid out. Some of the biggest ones we see are Shaw, Rogers, anything where you have cable television where you're renting the equipment and you move and you do not return that equipment and close your account. Within 2 months, that will go to collections. And if you haven't updated your mailing address information, they will be sending you the notices to the place that you have just moved out of. And you will have no idea that you're owing that balance. So it's really important that you make sure you're staying on top of your credit and that you know exactly what's going on there. The reason I bring that up is because you actually do have access to a free Equifax credit report every year. So we'll put the link in the description of our video below, but you can actually go in, just hold off on sharing the screen here. You can actually go in and look at your own credit bureau every year free of charge, as long as you make an account with Equifax. Highly recommend everybody do that. You also have access through third parties like Borrowwell, some mobile banking apps. I know Scotiabank and I believe TD Bank now allow you to see your TransUnion scores. It's not a full in-depth credit report like what we get, but at least you'll have a general idea of where your credit score is and that you're maintaining the appropriate numbers. The last little bit of information I'll leave you with: credit scores. 900 is perfect. 300 is the weakest possible score someone might have. Lenders really want to see you above 700. That's how you're going to get access to A rates. 600 to 700 is a gray area. It depends on the other strengths of your mortgage application, who's co-borrowing with you, length of time with employer, net worth, and the loan to value on the mortgage. So there's a lot of stuff with credit bureaus. This video is probably way over time, but I bet you I could triple the length if I really wanted to go into detail on everything. So if anybody ever wanted to get a full credit assessment on what their credit looked like, please do not hesitate to reach out to us. We do it every time we do a mortgage application for someone, whether they're buying in 3 months or 3 years. At least they know where their credit stands, whether it's good enough, and what they need to do to improve it over the next several months, years, while they're saving up, getting ready to get into the housing market. So we really appreciate you guys' support. Thank you for watching this video. If you haven't subscribed to our channel, please do. And do not hesitate to reach out to us if you ever wanted to inquire about a mortgage approval. Thanks, everyone.